Good morning, ladies and gentlemen. This is Options University. It's Friday, September 21st, 2012, and this is Butch Shorak with praying that he's going to get through this webinar and the voice holds up long enough to get through, as I definitely have laryngitis. Forgive me for the raspiness. Access to this video is for educational informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We are an educational site. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Looking at the week, we see that we are definitely still in an uptrend. And we see that during the first 4 days of the week, we have basically gone sideways. We see that we are in a down cycle in an uptrending market. We see that we are above this diagonal line that I had drawn on there previously. We see we're well above the 30-day moving average, and we see that we've consolidated most of this week after the Fed announcement that took place last Thursday. So, summary, uptrend in a uptrending market, with the last 4 days being a week that has gone sideways. We see that if we look at this indicator, it's basically a momentum indicator, and we see that it is headed up. So in spite of the fact that we've gone sideways all week and we've gotten lower lows and lower highs, which means a down cycle, we are still looking at a move that is headed higher. All right, with that, let's take a look at it in a little closer detail, and we'll look at it. Here we are. All right, there's Thursday. That's the Fed announcement. Friday, we had a nice big candle step up, possible potential reversal signal as we saw the inverted hammer. And then we see that the next day we got a lower high, a lower low. We got a lower high, a lower low. And then on Wednesday, we got a higher high, but not by much. Very tight trading range during the week as we were in option expiration week. Today we had a 3-hour big bad pullback, and we see when it was all said and done, we ended up with a hammer, and we'll see whether that's going to confirm tomorrow and resume our uptrend, or whether we're going to continue sideways as the week goes on. Labor statistics, employment numbers on Thursday were a bit disappointing, caused some of the initial downfall in the market, but you see it didn't hold as the bulls at the end of the day won out. You cannot fight the Fed, folks, so if you think you can, you're wrong. All right, with that, let's take a look at the Dow, see what it did. Looked very much like the SPX, going sideways, consolidating. Big wick on that candlestick on Thursday. What will Friday have to hold for us? Look at that first hour. Look at the high and low of the first hour. Find out where we're trading after that first hour. Give you an indication of where options expiration day may end up on Friday. Looking at the NASDAQ, we look at a little different situation. It looks exactly the same, except we did not have the same candlestick formation on the NASDAQ on Thursday as we did on the Dow and we had on the S&P. We don't have that doji, and we don't have the same length of wick as we see that we are definitely have a lower high and a lower low on the NASDAQ from Thursday's action. Finally, let's take a look at the rut. We'll see a bit more volatility in the rut, which generally we do, and we see that. Look at that pullback in the rut, and even pulled back further today. So does on Thursday. Does that mean that the rut is a precursor of what's happening for the market? Many times it does. So if that's the case, we may see follow through to the downside tomorrow. Not much for economic announcements on Friday, so the market will be able to drift wherever it wants on options expiration. Next, let's take a look at the VIX. See that there's not much excitement, not much fear in the market as we're down there between 13 and 15 all week long. And so we're not seeing a great deal of fear because Uncle Ben is there supporting the economy. Next, let's take a look at the bond market, and we see that as the market kind of settled down, pulled back, bond market finally popped back up above that 200-day moving average. Was to be expected. We talked about that on Monday, to watch for higher highs and higher lows, which we definitely got in the bond market. So you could have had an entry there, and it may have made some money for you. All right, next let's take a look at the financials. Financials pulling back with the overall market. Here's what's interesting. Remember, on the S&P, we basically went sideways, and today we had a what looked like a doji, and we see here the financials did not share in the same good week that everything else has. The financials are certainly down further for the week than the S&P was. Interesting. We'll see whether this is just a stall at this point or whether we're going lower. Will there be follow-up through to the downside? Next, look at oil. We see that oil pulled back with the overall market. Had a bit of a bounce today, but we did not have higher highs and higher lows. This oil finally pulled back after it reached over $100 a gallon. Taking a look at gold, we see that there is still plenty of movement to safety, as we see that the market this week in gold has basically just gone sideways. If we see this market continue up, will gold go up? I don't know. It's really hard to say, but I can tell you this much. Gold is at some real highs here for the last 6 months. All right, and then next, finally, let's take a look at the volume today. We see that we had in the spider a lower low and a lower high, in spite of the fact that we have a potential reversal signal. Remember, that means nothing until we get confirmation, because we are still in a down cycle there with a lower high, lower low on Thursday. And we see that we had quite a bit of volume on Thursday as the market really did some arguing to decide whether it was going to go up or whether it was going to go down. That's the market that took place this week. Friday is options expiration week. Beware, be careful. And with that thought, this is Butch Shorak. Those of you that are gold members, stick with me. We'll go through our stocks and see how our stocks performed relative to the overall market. And for those of you that would like to see more free videos, go to www.optionsuniversity.com/free gold. This is Butch Shorak with the Horse Voice. It's Options University. It's Friday, September 20th, 2012. And thank you very much for being here with us. We appreciate you. Well, to our gold members, welcome back. This is Butch Shorak with laryngitis, trying to get through this video. All right, so we see that as we look at this, what we had for the week is we went sideways. Look at today's candlestick on the SPX. Notice that it has the sign of a reversal. However, it is not a reversal until you get confirmation. So in tomorrow morning in that first hour, look for higher highs or see if we're headed down further. Notice how the S&P has come in down, hit that diagonal line, and then burst back up. We went down to right around 1450, a little bit below it on Thursday, and so we could go back and continue in this sideways motion. The market is bullish. It is very difficult to fight the Fed, and we could be headed higher as we see this market showing great resiliency. If you see a lower low tomorrow, then we know that our next stop is right around 1437. So that's where we're headed if we do pop through. Watch that first hour on Friday morning and see where we end up and which side of that first hour, high or low, we're actually trading on as we look at Friday morning. All right, and looking at Amazon, look at it went sideways for the week, and so did Amazon. Showed no weakness. If the market resumes its upward trend, you can look for Amazon to break out from this current trading zone. Let's take a look at the mighty Apple, and we see that it didn't really show any weakness whatsoever. As one of the analysts says that Apple is headed for 1,111. Lofty words for the Big Apple, as Apple usually pulls back after big announcements and after big earnings, but we see so far it is leading the pack. Apple leading the market up and not showing much weakness at all. Buy pullbacks on Apple. AutoZone, what a kind of move is that? And who says earnings don't count? AutoZone showing what the stuff is made out of. Expect this to head up into an upward trending stock as we see that kind of move taking place. The institutions are interested in AutoZone by pullbacks, looking at AutoZone. This is a real suggestion for you, certainly not a recommendation. As we look at CMG, we see that we're rolling over a little bit, but not all that much. Starting to show some strength after that last earnings where they got nailed so badly. CMG has had a nice run with this last run in the market. Looking for a new trading zone out of CMG. All right, let's take a look at Google. Can you say breakout irrespective of where the market's going? That's what Google's doing. If the market breaks up, expect Google to keep right on moving, headed for new highs. Now we'll take a look at Green Mountain Coffee. See it pulling back. Look for a bounce off of this moving average as we see GMCR, Green Mountain Coffee, pulling back a little bit harder than the overall market. Looking at ISRG, we see that it has also pulled back during the first 4 days of the week, up on Monday and then pulled back to that moving average. Look for a bounce if the market pulls on this, looking for higher highs and higher lows as we're right around this 200-day moving average. ISRG certainly could go higher, or you could wait till we get a breakout above 520 and make your entry there. Look for volume on that breakout on ISRG. MasterCard showed why it was impressed by Bernanke as it just kept right on running. Big day today out of MasterCard, ending with quite a high up there. And about halfway up the candlestick. If the market continues up, look for MasterCard to continue its run. Okay, next let's take a look at McDonald's, and we see McDonald's pulling up, heading back up, hit that 200-day moving average. McDonald's showing great resiliency since about the middle of August, and heading back up. We could maybe see 102 out of McDonald's as it was the previous high in the first quarter. All right, looking at Nike, we see Nike's going nowhere, coming into earnings. Will it have an earnings run? Doesn't look like it. Earnings could have a big influence on Nike, so we're too close to earnings to be doing any condors or anything like that. Wait till after earnings to see where a Nike is going to come out. Next, take a look at Priceline. Priceline headed on up, made a nice little move, bounced above many of its moving averages, above its 200-day moving average, trying to show where it belongs. If we got just some strength out of Europe, you could watch Priceline head up for new highs. W.W. Grainger is the next stock we're going to look at, and we see that it pulled back with the overall market, trading in a zone. Certainly kind of stock that one might look at for an iron condor. So pick out your strike prices and find yourself a trade. WW doesn't seem to be going much of anywhere, even though nice, strong stock, well loved during earnings, as we can see with that big earnings candlestick there, trading pretty much in a zone that goes from there to there. And as of late, it's trading right along that line. So WW Grainger, one of the solid all-American stocks. With that thought, it has been quite a week as the market basically went nowhere. We had a bit of a pullback, but nobody could call this a bearish market. As we are in an uptrend, and don't fight the Fed, the market will go up and will bounce off of these little pullbacks that we have. September is usually a dangerous month in the market. I don't know that that danger is gone yet. So if you're very conservative, it may be the time to just wait till we get into the end of this month and see what's going to happen. See if we get that pullback. But the market is in general going up. We do not fight the Fed. So with that thought, this is Butch Shorak, Options University, Friday, September 21st, 2012.